Good morning. Just half an hour away from the opening bell in Hong Kong, with cash markets in Shanghai and Shenzhen already shuts for the Lunar New Year. You're watching the China Show. I'm David Ingles with Stephen Engle.
Well, Asian stocks fell, with tech taking a big hit after Wall Street sell-off on concerns over the AI trade. President Trump calling the rise of China's DeepSeek a wake-up call for the United States.
Now, the president also announcing plans to impose tariffs on foreign pharmaceuticals, semiconductors, and also metals. That's to bring production back to the United States.
Also ahead, former hedge fund manager Scott Bessent wins Senate confirmation as Treasury Secretary, with immediate challenges including managing the U.S. debt load.
And one stock we're tracking towards the open today, China, Vanke, and top executives stepping down after the company warning of a record $6 billion full-year loss. Welcome to the show and good morning. Good Tuesday morning. 24 hours since the newest story in town rattled global markets. Some signs of stability, right? A semblance of stability, I should note there, across U.S. futures right now, following just that massive drop that we had, particularly within the tech space. Bottom of your screens, NVIDIA after hours, coming off highs a little bit. We were up as much as 2-3% on the stock. VIX futures are coming down a little bit, and we are seeing the Treasury market stable after really where you are on nominal yields, the lowest level so far of the year. Now, all that being said, while that is stable, Asia is actually doing quite badly, tracking the losses overnight. We have a number of markets shut, of course, across the Asia Pacific. So you don't have the likes of Korea. Taiwan, which should be opening up right now, is actually also shut today. It's worth pointing out, though, TSMC, which is effectively where my mind goes with the AI story in the Asia Pacific, down 13% overnight. The Nikkei's taking the biggest hit right now, 1.2% to the downside. Singapore's coming in line. A50 futures are pointing to, there we go, gains yet again for Chinese stocks. We'll see how this pans out these next few minutes or so. A lot of the losses we're seeing here very quickly, down to really what we're seeing across this pocket in the equity markets, AI and tech-related stocks, as you can see on your screens. The other related story here is, to what extent was an unwind in the carry the chicken or the egg on this massive sell-off that we had overnight, right? Because you had a massive pullback in dollar-yen yesterday. In fact, this move yesterday was the biggest single-day move in dollar-yen going back about 4 months or so. It's hard to just look at this from a sort of vacuum perspective, because on Friday, keep in mind, right, the BOJ hiked interest rates. Last time they did that, we know what happened back in August, of course. Very quickly, a glance at some of the majors right now. Euro, dollar, you have the Mexican peso, which did have a very bad Monday, of course, and dollar China on your screens right now. So we are seeing the dollar again picking up. And this might be, Steve, on the back of some news coming through out of the U.S. president of late, which we can get to later on, of course, Steve.
Yeah, that's right. It was 24 hours ago, Dave, where you and I were right here in this studio talking about DeepSeek, and, of course, the ramifications started piling up over the last 24 hours. Seems like an eternity ago. We're going to be going deep into the DeepSeek issues. Obviously, we're going to have a number of guests. Jen Zhu Scott of In Capital joins us later with her outlook. And in the next hour, we'll be joined by Edith Yeung, founding partner at Race Capital. All right, let's bring up the agenda. It's going to be heavy on the markets, obviously, and DeepSeek, as we see day two after that big rout on Wall Street, with NVIDIA having the biggest wipeout of market cap in history. We'll get into the ramifications, as also the ramifications and the impact on AI development and spending with DeepSeek. President Trump saying the rapid rise of that Chinese AI startup, DeepSeek, should serve as a wake-up call for U.S. industries. He made the comments to a Republican Party forum while announcing that he'll soon place tariffs on foreign-produced semiconductor chips, pharmaceuticals, and steel. Let's hear from the president.
The release of DeepSeek AI from a Chinese company should be a wake-up call for our industries, that we need to be laser-focused on competing to win.
Robert Lee's here with us on set, our Bloomberg Intelligence senior analyst, to talk us through. So we're 24 hours from effectively when markets started to react to this story. We've managed to sleep on things a little bit. How much better off are we in terms of just what we know about this?
Well, as I said, I think from an Asian point of view, DeepSeek has been known for some time because it's been growing in profile in this part of the world, and they have primarily been focusing their efforts in competition against the big tech platforms here, the Alibabas, the ByteDances, and Tencents of this world. They've been incredibly aggressive on pricing, and their ability to do that has been obviously underpinned by this very innovative model they have based on a new architecture called Mixture of Experts. So obviously what has changed over the last 24 hours is I think many people in the US have woken up to the fact that whilst US exports put a huge stumbling block in the path of China's AI developments, you know, all good engineers innovate. They innovate around the problem. They've got to work around it, go under it, go over it, go whatever. And whilst China may be behind on the semiconductor front, it's got inherent strong core strength in software development. And the rapid development of companies like DeepSeek sort of illustrates that. So they have worked their way around the problem. They have developed new, more efficient models which are highly competitive and cost competitive, circumventing those US export controls, and now directly competing with some of these huge tech platforms in the US, which is obviously what has upset markets, to state the obvious.
Well, on the market reaction, was this the straw that broke the proverbial camel's back as far as giving traders perhaps an opportunity or an excuse to sell out of the bubble that we've seen in AI? Or is it truly creative disruption that is happening within the AI space that is going to challenge the whole business model of spending so much on AI in the anticipation of future billions and billions of dollars of returns?
I'm just thinking we need one of these little bells before I start off for the cliche counter, and I'll try and stay clear of the cliches. But first one, you know, when stocks are priced to perfection, when they're trading on such high multiples, particularly in the US, they're very vulnerable to events like this. And whilst we've seen some degree of volatility on US tech stocks, I think there's a very, very high level of expectation has been priced in. So obviously the evidence that the Chinese are rapidly narrowing the gap has caused people to rethink. But I think taking a step back in terms of where we are in the cycle, humongous amounts are being spent on CapEx by the big tech platforms, $10+ billion CapEx per quarter. And if you saw Meta last week, they're even upping that. The fundamental issue for the companies globally and in China is monetization. And I think the evidence has been there that the rate of monetization has been nowhere fast enough. These companies' CapEx spending plans has been, I would argue, largely driven by fear of missing out. And again, as President Trump says, this is a wake-up call, not just to the US sector, but I think for AI companies globally. And I think will possibly lead to a reset in thinking in terms of their commercialization and monetization plans. You cannot continuously spend such huge amounts on CapEx when there's no realistic near-term chance of monetizing. I think that is really the fundamental issue.
Unless you're the government, of course, where the math becomes slightly different. Robert, thank you so much. Robert Lee, our Bloomberg Intelligence senior analyst. In fact, for our Bloomberg clients, our question of the day today is, has what happened signaled that a peak is in on the NASDAQ with the DeepSeek conversation? Chime in, of course, on our question of the day. Let's bring in Adrian Zuercher, Global Wealth Management, co-head of asset allocation at UBS. It's nice to see you and good morning.
Good morning.
Good morning.
Tech earnings have taken on an additional layer of significance this week. What do you think we should be paying attention to as far as guidance and CapEx? To Robert's point, how do we need to be rethinking about big tech at this point?
Pretty amazing what happened the last 24 hours. Look, I think we are actually really kicking off the earnings season for the tech sector this week. Definitely, we would like to see more confidence and more sort of confirmation that the spending can continue, CapEx spending can continue. As we just have heard last week, we got big announcements. We don't think that one open source, even if it's really amazing what they have done, fraction of training costs, fraction of interference costs to produce a model like that in DeepSeek, but it will unravel basically the path of spending. I think we are still far away from reaching this general artificial intelligence, which everybody would like to achieve. I think we're really scratching at the surface of the technology yet. and therefore there will be still massive investments going on. But short term, I think the easy beta trade of the AI is behind us. You probably have to do a bit more digging. You have to do research. These companies have to deliver on earnings. They have to confirm that they have a plan at least to monetize that. And otherwise, we will see that investors which are really piled into these stocks will actually retreat, and we will see a setback. So it's about alpha, I think, the next leg of this AI rally, and not about beta.
Well, let me pose the question of the day to you. Does this signal, though, for right now, a peak is in for the NASDAQ? It was down 3% overnight.
Well, we still see upside overall for U.S. market. It's still our favorite market. I think valuation overall actually not that stretched. It's a few stocks that are really having stretched valuation. Now, they also had very, very strong earnings growth over the last 24 months. And so it's basically justified. But the margin of error is really, really small now. So they have to deliver. And so this will be a really crucial week for the NASDAQ and for the overall market to see if these earnings are coming through, if the CapEx spending will continue, and then also a plan on the future investments. But yeah, the risk actually has increased. We do expect more volatility. Some of this volatility will give opportunities to enter, maybe at cheaper levels. But you can't just buy the general AI hype. I think we also have to start to look into more these companies which are actually able to utilize some of that computing power, the technology, to basically gain productivity, increasing their margins. So moving away just from the infrastructure side, more from companies that actually also can use that technology to their own benefit.
You mentioned just now your favorite market is still the United States. So if it's not the tech story for now, what else is in this market that appeals to you still?
Well, I do think overall Trump policies should be positive. Growth is very, very strong. The consumer side is really keeping up. We still believe that inflation is normalizing. We have tailwinds, particularly from the shelter, which is the biggest part of inflation. Yeah. And therefore, we do think the Fed will be able to cut interest rates. And the valuation overall is not that stretched. I mean, the equity market, the U.S. equity market was up 25% last year. If you basically take out the 13 largest stocks, the market was only up 8%. So there's value in some of the sectors. And I think, for example, energy sector, power and resources, it's still something you will need, given the age of AI will not just stop. I think actually, if anything, DeepSeek shows that it actually can expand. It's one on top of the downloads in terms of apps, and actually will increase the penetration of AI in the overall market.
How do you separate, from a market perspective, the difference between the large language models that are being built, so whether it's OpenAI or Meta, Tesla, Google, all these players, and the sell-off there, versus the hardware makers, the NVIDIAs, the TSMCs, and the like? Is there a way of looking at them differently under this microscope of DeepSeek has been the great disruptor?
Well,
who gets punished more?
Well, I think overall we are in a very early stage of that. And so it's very unclear on how much computing power we need eventually, which model will be the model that succeeds. We all know from the internet time 20 years back or 25 years back, there will be only a few that survive. There are disruptors, and there will be disruptors that disrupt the disruptors. And so we are still in a future world, and it's very difficult to put a price tag behind that and see who's the winner. I think the best strategy is actually you broadly diversify. You also look into probably the private sector, which from there probably some of these disruptors will emerge. And you have to have an open mind. And valuation still matters. I think, as I said, the beta part has now driven up these valuations. The next step will be showing basically the investors that they can monetize some of that.
All right, Adrian, sit tight. We're going to come back to you and talk about a number of other things on a day when the Fed is not even at the top of our list of things to talk about. All right, Adrian Zuercher, UBS Global Wealth Management co-head and Global Asset Allocation. And we are counting down to the open of trade in Hong Kong. We are seeing Japan's Topix index already erasing some earlier drops. We'll be watching closely Hong Kong's open. I believe it's a half-day session, Dave, today, as we head into the Year of the Snake. This is The China Show.
Right, welcome back. You're watching the China Show. 13 minutes to the opening bell here in Hong Kong. A reminder that mainland markets are already shut for the Lunar New Year holidays. So you don't have a Stock Connect, of course, program, no northbound, no southbound. And it's a truncated session as well here in Hong Kong. So for trading for about 2.5 hours, and then we can call it happy hour. Let's call it that way for others. Okay, we're looking at U.S. Treasuries and the drop that we had overnight into where we are. Bloomberg Dollar Index, bottom of your screens, dollar strength is continuing to come through. Yields are picking up a little bit, but I'm being generous with that 1 to 2 basis points to the upside. We're back with UBS Global Wealth Management co-head of asset allocation, Adrian Zuercher. One of the thesis that you guys put out is lower yields ahead. Why?
Yes. Well, I think actually it's my high conviction trade currently in the portfolio. I do think overall there's still space for inflation to normalize through the shelter sector mainly. Now, I know there's all these tariffs fears, and that's basically backed out yields, and that's made it very attractive for us to re-enter, to add to this position, which yesterday we have seen as soon as there's a little bit of market uncertainties, yields are backing up or down, and that actually helps the portfolio and the performance. Now, I think the fears on tariffs are basically overestimated. Not the tariffs itself. We actually have higher tariffs expectations for China. We do expect that 30% will eventually be put on China imports in the U.S. But I actually think the marginal impact on inflation will be very minimal. It's a one-off. There's only 12% of actually import goods from China into the U.S. And that's coming down from around 18% from 5, 6, 7 years ago. So an inflation impact will be very minimal. And I think we are at this stage where the economy is doing well, but if interest rates shoot back up again, going to 5, it will actually start to harm. And the natural effect will be equity markets will drop. And we have seen as soon as equity markets are dropping, yields are also coming back. So any spike in yields for me is actually buying opportunity because it will be very temporary. And we have seen the Fed has shifted. There are only 2 interest rate cuts that are expected. But actually, if you look at the sort of the terminal rates going into 2027, 2028 and dot plots, that hasn't moved at all. So they're still expecting at 3%. And so it's just a matter of timing when the Fed will scale back interest rates. And therefore, I think it's a very interesting, attractive trade.
Well, this week with the market market participants looking at the sell-off, obviously that was overnight, maybe the Fed narrative will be damped down a little bit. But what do you expect? What are you watching for from the Fed this week, given the growth momentum is still pretty strong in the U.S.?
Yeah, of course. I think the Fed is mainly concerned about two inflations part. One is from the housing side, and I think there we have tailwind. The other one is on the labor market. Now we know that some of the Trump policies on immigration might be inflationary and will put pressure on the labor market. We looked into that, but it's usually a bit more on the lower end job side, and so the effect itself might be less strong. That's one part. The other part is that the Fed probably will skip basically the hikes maybe until March or April. Will be very data dependent, but there's still room. I think they have over tightened through the period where they lost control of inflation, and they will still have to scale that back to sort of where the neutral rates are. And therefore, it's a matter of time. So we still think 2 to 3 this year is possible, probably on a quarterly basis. So it's a slowdown. And that's probably what the Fed will look at. They will remain very data dependent, looking for clues from the Trump administration. And that's what we have to look at. But maybe on the rate side, it's not just the U.S. side, right? So we have Europe, we have UK, and we actually think gilts at this point look very, very attractive, for example. Inflation is high, but we start to see the economy is actually starting to decelerate. The BOE has a lot of room to cut. And so you just want to look at the U.S. I think in Europe there's actually really good opportunities as well on looking for lower rates, and I think that's a very safe bet at this point.
Yeah, I think the ECB is also on deck this week, and I think it was as recent as a few weeks back, the conversation around the ECB was, could they even cut by 50 basis points, right? And I think to the downside, I think we're looking at almost a full percentage point. Let me just ask you very quickly about China. has anything changed for you guys? Markets, I think, at 20,000, 21,000, we're back to about 6-week highs on the Hang Seng Index. I mean, is this one of those things again where we come back down?
We are still neutral on China. I think the policies, the tariffs will impact. I know the revenue exposure is very little. It's very domestic, but the domestic economy is still ailing. Right. We need more support for the housing market to come through. Now, within China, there's definitely opportunity within the tech sector. Also, after the news we had for the last 24 hours on AI. And then also, we think SOE companies, dividend yield companies in China looks quite interesting. Yields are still heading lower. I think the 10-year treasury is below the 10-year in Japan. And we still see probably another 30, 40 basis points of yield contraction over the next 12 months.
Adrian, thank you for coming in, and have a great long holiday ahead. Adrian Zuercher there, UBS Global Wealth Management, co-head Global Asset Allocation. Going into the open today, we are looking at your pre-markets are doing this on your screens. And yeah, effectively we're trading at about the highest in about 6 weeks or so. There we go on Hang Seng Index. So some tailwinds coming through as far as the benchmark goes. And some of the AI plays are continuing to see some upside. And separately, of course, we'll talk about the Vanke story because they're guiding towards a record loss, plus, of course, a change-up as far as the executives are concerned. Plenty more ahead. This is Bloomberg. Welcome back. You're watching the China Show. Going into the Hong Kong Open today, we're looking at shares of China Vanke up about 9%. So it's up in the pre-markets. This report of local government support is really, I guess, what's behind the move so far. Of course, it did guide towards earnings, record loss for the full year, plus, of course, some changes as far as top management goes.
Yeah, chairman and CEO both resigning for various reasons. One, health reasons. The other, work adjustment reasons. Now, profit warning had a lot to do with it as well.
There we go. Okay, and we're looking at Citi, in fact, just putting out a note here that the reshuffle at the top, meaning has its parent company's continued support, which is fairly decent as far as the company is concerned. Plenty more ahead. The Open is next.
And welcome back. You're watching, of course, the China Show. We're counting down to the open of markets here in Hong Kong. An abbreviated session, Dave, so not a lot of action, but a lot of reverberations, obviously, from the sell-off on Wall Street overnight with big tech taking a hit.
Yeah, and I think it's one of those things where, I mean, certainly the China side of the equation has really been almost a seesaw for that trade, right? You've seen a pullback in U.S. tech. I can tell you we are still seeing some upside right now across some of these Chinese tech names. In fact, on the Hang Seng Tech Index, just as an example, in fact, we are either there or flirting with the upper end of the recent range. And if we do close above these levels today, that effectively puts us at a highest level going back to the start of October. So we have been seeing some upside here. To what extent, how much information do we know right now, to extrapolate how far this trade can actually go, right? So I think that's a really fancy way of putting it. There's still a lot we don't know about this. In any case, of course, markets are running up. As you can see, 0.5% to the upside on the Hang Seng Index. HS Tech, as we were pointing out, the level to watch here is just below the 4,700 level, which now effectively puts us at about 3-4 month highs as far as that is concerned. Some of the big tech plays bottom of your screens, Tencent, Alibaba, Meituan, are all seeing some upside still in the order of about 1% each. Speaking of some of the more AI-focused names that we were tracking yesterday, so Baidu had a very good session. SenseTime, fantastic session as well, building on those gains, as you can see. The third ticker on your screens is the Global X China Robotics and AI ETF. If you guys are any curious, you can check that out. 0.8% to the upside, although that one actually saw substantial downside yesterday. And a lot of the constituents there actually are listed onshore in China. Some of the sort of members and constituents that it tracks. iFlyTech, for example, is a good example of that. Very quickly, other things to note here as far as the China Open is concerned, Hong Kong Open rather. And before we pivot back to the DeepSeek conversation, China Vanke is up now 12%. That is really a lot of that has to do with now the notion that because of the changes, the company will be getting a lot more local government support. 11% of the upside. Fosun Tourism unchanged, following a profit warning there, Steve, of the company.
Yeah, that's right. Let's bring in Jen Zhu Scott, founding partner at in AI and deep tech-focused investments, in capital. Jen, thanks for joining us. Obviously, this is the topic du jour. How many legs does this story have? This is a great disruptor. This is why the market sold off overnight, questioning the whole capital raising business model of the big large language models going forward. But is this just a simple disruptor story, or is this an actual, significant moment in the development of AI?
Thank you for having me back. Great to see you, David and Steve. Happy New Year. So the deepest question, of course, first we need to ask is how did DeepSeek's CEO manage to pull this off without going on any podcast? But joke aside, I think this is a monumental moment for global AI development because for quite a while it has look like that the AI development will be very centralized. Handful few players, they build a very, very high wall in terms of capex, compute, energy, talents, and the methods. But DeepSeek did was not only just make the products free, but also they released the entire research open source so you can see how they did it and how they did it so efficiently. Now the world has this knowledge. This has forever democratized this current most advanced version of AI. So I do think this moment will be remembered probably as significant as when AlphaGo first came out for the global AI development. Steve.
Yeah. So Jen, let me ask you this. Let me phrase the question simply. The people are trying to understand now in the markets. And I'll simply use NVIDIA as an example, but certainly by no means is it only an NVIDIA story. Will the world now need as much stuff from NVIDIA because of what's happened?
This is a very good question. David, you remember 8 months ago we had this conversation and I questioned why the entire world bought into this thesis that you need to build taller and taller building on Earth in order to go into Mars. Now, DeepSeek just showed actually you can just fly there with a rocket. So in the short term, I think the market will reconcile in terms of how much capex, how much compute you actually need to build advanced AI. DeepSeek's R1 has proved that you don't really need that much if you really code less advanced chips to 100% of its capacity and potential. So in the short term, I think NVIDIA and other chip companies will take a hit because their projection previously, before last Monday, was based on this kind of building higher and higher, building on Earth kind of thesis. But post R1, I actually think the chip companies will be fine because what it means, this democratization of underlying AI infrastructure, it means that there will be more applications. And for applications, compute still need. So for chip companies, right now, perhaps more advanced like H100 and Blackwell will be reconsidered. How much would that be needed? But for 4090, for example, the demand probably will go up more. So I think the R1's commercial implication to the market is that the technical side of the AI has been commoditized as of last Monday, and the real barrier is actually just compute and energy and how sustainable this compute and energy supply were going to be.
Well, that raises the questions as well, Jen, about the stated amount of capital that was put into DeepSeek. The number was astonishingly low at $6 million. We're not to assume that this model can be replicated at such a low cost. I think the real deep dive is going to be happening into how they did it. And as well on the deep I guess, on the open source question as well. Is it open source or open weight, where the data and the algorithms and all are sort of hidden as well, but then the development can be open source?
So the good news is that DeepSeek actually completely disclosed all the details how they did it in their research paper. So for people who actually read the paper, understand the paper, will be able to see, yes, they are able to do that. But of course, I think a healthy dose of skepticism is very, very good. It's needed. But even if you multiply their spend and their cost by 10 times, 20 times, this is still an order of magnitude in terms of the cost reduction. Steve.
That brings up, and I wonder if you could comment on some of the theories out there as far as what access DeepSeek had to H100 trips, for example. And I'm wondering where your head is at as far as many of these, in some cases, conspiracy theories, I have to say, are concerned, Jen.
Yeah, I found that kind of accusation, conspiracy theory, is a very weak response to this monumental moment because, number one, there's no evidence. We don't know. I don't know. And there's no evidence. So I think for journalists, for all of you, whenever people make that claim, it's worth push back, provide some evidence and, what's the base of the claim. But number two, it's the reason I think this kind of argument and conspiracy theory is very weak is because even if, as a lot of people speculated, and they had trained this on 50,000 H100, but guess what? Microsoft had bought about 400,000 H100 last year alone. And OpenAI bought about 390,000 or close to 400,000 H100 alone. And why didn't they bring this solution to the world and make it open source?
Right.
So, yeah, I found that kind of argument is kind of distraction. It's besides the point.
Well, Jen, what does it tell you about the efficacy of the previous administration's tech curbs and access to those H100 accelerators from NVIDIA and other processors and quantum computing and the like? Some were saying it basically shows, DeepSeek shows, that those curbs did not necessarily work. Even Donald Trump today was essentially saying it's a wake-up call for U.S. industries to better compete.
I have to agree with Trump on this one because the Biden administration's policies in terms of banning certain exports proven backfired. And David might remember 8 months ago, I was on this platform. We're talking about how you can get to advanced AI. There are a couple ways to get there. Number one is you have unlimited compute, unlimited energy, unlimited capital. Or you have less of former, so you work on the efficiency. And DeepSeek, along with quite a few companies, and by the way, DeepSeek is not the only company in China working on this efficiency gain. So because of those export restriction Biden has put in place, it forced China players to be on the efficiency and inference game much, much earlier than everybody else. So as I predicted 8 months ago, this efficiency game most likely will be realized from Chinese players by necessity. And we're here today. So I do think that what Trump said in terms of just be a better competitor is actually what the world needs. If you think about, let's just put this U.S.-China framework aside. There are more than just two countries in this world, and there are more than citizens of U.S. and China in this world who need to access this most transformative general technology and AI. So if the two countries' best talents actually compete to provide the best solution, make it very affordable, accessible for all the people in the world, we probably will have a much more equitable AI economy globally.
Yeah, Jen, you understand the Chinese ecosystem a lot better than most people. So I want to understand, as a final question, was DeepSeek an exception, or was it simply the first Chinese company that the world noticed?
I I personally noticed the DeepSeek last year because of various research paper. They approach just so differently from architecture level, so it's very impressive. But there are actually quite a few companies, apart from the more better known like Alibaba, Baidu, and ByteDance, they are all investing very heavily in terms of generative AI. But also there are some other startups, for example, Beijing-based Moonshot. They actually just released a Kimi AI, also completely open source and free, and outperform Cloud 3.5 and ChatGPT 4.40. So because people, don't know what's happening within China tech industry, probably don't really understand how competitive the domestic market is. It's very difficult to survive if you don't really don't try to be the best. And right now there are multiple companies and companies like Moonshot and DeepSeek, smaller companies, actually putting pressure on ByteDance and Baidu and Alibaba, etc., to release some of their services much more open source and at lower cost or even free as well. So I think from general, public, this is a great moment. But of course, I think for stock investors in the U.S. right now need to take a hit in the short term.
Yeah, a massive hit to underscore that point. Fantastic. Have a great Lunar New Year. Happy Lunar New Year, Jen Zhu, Jen AI Scott, founding partner at In Capital. Right, you can read more about the DeepSeek conversation, how it's upending assumptions about the cost of the technology. That's, in fact, the subject of the Big Take today. For terminal subscribers, check it out, NI Big Take on your terminals. You can also go on the internet, Bloomberg.com, to check that story out. Markets are bid here in Hong Kong. Plenty more ahead. This is the China Show. Welcome back. So we're about 14, nearing 15 minutes into the cash market session, and in just over 2 hours from now, the market's going to be shut. Truncated session, no afternoon session, as we head into an early off day for traders and markets here in Hong Kong ahead of the Lunar New Year. S&P futures, bottom of your screens, catching a decent, modest bid following the okay, I'll be kind, so I'll skip the descriptor there, blank overnight. Let's take a look at shares of China Vanke right now after it reported getting some local government support. It came out, of course, with a massive number as far as the guidance and the net loss was concerned. We opened as high as 12%. We are pairing some of the gains up about 8% still. Let's bring in Loretta Chen, our China credit reporter, to talk us through this. And I guess, Loretta, take us through the details of the local government support angle here.
Yeah, so I think what's happening with China Vanke is really the executives that were originally Vanke's chairman and CEO are taking a backseat, whereas the Shenzhen government really put in associates of the Shenzhen Metro, which is Vanke's largest shareholder and a state-owned entity, to really have a closer grip on the company. So that signals further state support for the company, and I think potentially could even pave the way for a further state takeover or just more state ownership of the company, because currently Shenzhen Metro is not the majority shareholder. So there's a lot for them to do going forward. And you see local media report really saying that the Shenzhen government is going to inject capital into Shenzhen Metro, which the funding will be used to be channeled into Vanke as well.
Well, Loretta, on that point, why is Vanke being treated differently than some of the other troubled developers? Is it simply a case of too big to fail, and that they could be some takeover state involvement, obviously, in this company?
Yeah, I think the special thing about Vanke is, first, it's a household name. If you let this company fail, that really spells the end of consumer confidence and any recovery in China property sector. So I think the government is wary of that kind of effect. And I think secondly, Vanke has this kind of mixed ownership structure. So, it can be considered sort of as a private enterprise because it's really, controlled or being governed by executives, but on the other hand, it has that central Shenzhen Metro stake. So for the past year, we're really seeing the government reiterating that state support because of that Shenzhen Metro ownership. So I think from that perspective, the government support should be there to really place a bottom for the company. And now you're seeing, Vanke really reporting that record loss, which means that it doesn't get any sort of help from all these past support of the government on the property sector. It's not really benefiting. So I think that's why they're stepping up that level of support. And I think another point is how if Vanke fails, how that's going to impact other fully state-owned enterprises like Poly Development or China Overseas Land.
Well, right. I mean, we've kind of glossed over that whole point until you just mentioned it about this record profit warning for the full year of $6.2 billion US. And it was particularly bad in the fourth quarter when developers were supposed to have gotten some sort of support, or at least the authorities through policy had put a floor or stabilized the market. But they had a particularly bad quarter. What does that tell you about the overall health of the property sector right now, when even stimulus to put a floor in doesn't necessarily help a large developer like Vanke?
Yeah, I think if you look at the physical market, home sales have actually stabilized, and home prices has actually sort of also, well, I guess it's still slumping, but dropping at a slower pace. So people are kind of thinking the market has found a bottom, but at the same time, major developers like Vanke doesn't really get any of that signs of stabilizing from its financials. So it's telling us that the market, the home buyers are mostly going to, the safer state-owned, 100% kind of state-owned companies to buy their houses. So companies like Vanke aren't really, benefiting from any of that. So I think if the government is able to show, that Vanke is one of those companies that can get full state support, it could potentially help with the kind of home buyer sentiment.
All right, Bloomberg China credit reporter Loretta Chen, great insight. Appreciate it. And happy Lunar New Year to you as well. Plenty more ahead. This is Bloomberg. And welcome back to the China Show. Here are some of the major corporate stories we are following this Tuesday morning. Tesla and BMW have become the latest car makers to challenge the EU's tariffs on Chinese-made EVs. Both car makers have filed suits at the General Court of the European Union, which is the bloc's second highest court. The EU imposed tariffs last October after an investigation found that China unfairly subsidized its EV industry. Well, Estee Lauder is said to be reviewing its portfolio of brands, which include Clinique, Smashbox, Tom Ford, and Aveda. Sources say the cosmetics giant is working with Evercore on the review, which could lead to the sale of some of its brands. Estee Lauder has been losing market share to more nimble rivals, while demand from China has been slow to rebound. And UBS is said to be making a wave of job cuts in its home market, Switzerland, with hundreds of staff getting notices in recent weeks. Sources say the current round of cuts is across the ranks, including higher management. UBS has said it expects about 3,000 redundancies in Switzerland as it integrates Credit Suisse.
All right, let's have a look at markets right now. So we're starting things off. So apart from, let's, I guess, step away a little bit just for a few moments here from the DeepSeek story. So this détente between China and India means that direct flights are resumed and easing visa restrictions. We're not really seeing much reaction as far as this is concerned, although that being said, of course, we are in the thick of a holiday here, so there might really not be a lot of expression out there, let's put it that way. Volumes are certainly much, much lower today. You don't have the stock connects in place today, so just keep that in mind. 2.5% though to the upside on Tongchang Travel Holdings. Okay, what else are we looking at here? Okay, we do have there. When breaking out is not just about pimples and acne. There we go. Chinese tech seem to be breaking out of this recent range, or we've topped, in fact, the high that we hit back in early December and around the sort of early November levels. I mean, this is a small win, but as you can see, there really has been some momentum coming through here.
We're just getting some headlines here, and this is will be a very interesting discussion. Trump is confirming that Microsoft is in discussions about TikTok. Apparently, he is speaking with reporters aboard Air Force One. So Microsoft now, potentially, according to President Trump, is jumping into the fray, potentially as a suitor for TikTok.
Yeah, as we look ahead to that deadline, wasn't it? And it seemed to be
75 days, right?
75, right? So that it's become a shorter runway instead of the 90 days.
Yeah, that's right. And we've heard a number of companies that are potentially putting their name in the hat, but Microsoft is a big one, obviously.
Yeah. I think they have some money to spare.
Yeah, they probably do.
We'll keep on top of the story and get you more details once we have more on that. Hang Seng Index 0.3%, and this is really taking place amidst signs of or semblance of stability across these markets, with U.S. futures now steady after the poleaxing it took in the Monday session. Plenty more ahead. Second hour of the China Show is coming up next. Good morning from the Asia Pacific. The second hour of the China Show is upon us, 30 minutes into the cash market session in Hong Kong, where volumes are extremely on the thinner side. In fact, we're about 57% below your 30-day average, and a lot of that is mechanical because you don't have, of course, stock connects today. Mainland China is already shut, and in about 2 hours from now, traders in Hong Kong or their algorithms get an early break. There we go. Truncated session here in Hong Kong. Right, so a couple of themes that we're tracking here today. We're seeing some semblance of stability across risk assets in the U.S. We can get to that in a moment. But here in Asia, it's an extension, really, of the pullback we saw as far as tech is concerned in the U.S. In fact, when you look at some of these names in Japan, we're entering the latter part of the morning session there, and we are coming off lows in some cases, but still, as you can see, quite material drags there. Nikkei is down about a third day. The topics, though, was able to at least shake off some of the early cobwebs. Still some pressure, though, across this specific part of the equity market. Okay, let's change the page, please, if we can. And this now effectively takes us into breaking news. So we are seeing the dollar, as you can see, starting to come alive yet again. This is a two-day look at the Japanese yen, and again, the conversations around the carry unwind following the biggest drop in about 3 or 4 months in dollar yen. A lot of this now has to do with the fact that we are hearing from President Trump. I believe he is speaking on Air Force One. We'll get clarity on that in a moment. He's talking about tariffs, that he prefers much bigger tariffs than a certain rate, for example. So Bloomberg Dollar Index, in fact, should be hitting session highs as we speak. Can we get that up, please, if we can? So we can show that too. And really the currency space, there we go. Thank you so much. US dollar offshore. What is that ticker? Okay, that looks funny. Anyway, FX on offer. As you can see, dollars on the way up. Bloomberg Dollar Index near session highs here, Steve.
Yeah, we're just digesting these latest headlines as Donald Trump is speaking aboard Air Force One to his gaggle of reporters. The latest one, he wants universal tariff at a much bigger level than that 2.5%. He has a tariff level in mind. He's just not setting it yet. Let's bring in our news desk editor, Jill Deeses, to digest some of these latest lines. Do we know what specifically he's talking about? Pharma here, but he's also overnight talked about a number of tariffs on other industries, whether it's steel, copper, pharmaceuticals. How are you reading this?
Yes, that's right, Steve. Well, I think, as with a lot of these types of Trump press conferences, it always helps to kind of back up and try to figure out the origin of where some of these remarks come. I believe that 2.5% number is in reference actually to a Financial Times report that was talking about Donald Trump's newly confirmed Treasury Secretary, Scott Bessent. He actually, according to that report, is mulling the idea, he's supportive of the idea of 2.5% universal tariffs as sort of a gradual starting point. So again, without more context on exactly, how Trump has been riffing on during this Air Force One briefing, I would just say that that's where that number has kind of been coming from, at least in some recent discussions. And so if Trump is ultimately saying that he wants more than that, maybe there's still some wiggle room in terms of where things are going. But I do think that what that does tell us is a bit of information about where Trump stands on that more aggressive tariff policy, compared to some of these thoughts that are maybe kind of, kicking around within his administration. Obviously, that's not, that seems to be a starting point rather than a finish line, but we'll kind of see where things develop from there.
He's also touching on TikTok, and now we understand that Microsoft might be involved here.
Yeah, so that's apparently, he's saying that they're at least in the discussions for a TikTok sale. Of course, just to recap for our viewers here, we've got until about the start of April or so for, TikTok to really sort of figure out whether they can actually sell. Of course, Chinese parent ByteDance has been kind of compelled to sell TikTok. Trump has been very supportive of some kind of a deal. He has said pretty openly that he would prefer for the U.S. to get the government to get some kind of a cut in any kind of deal. Unclear whether or not that could actually happen, but it does seem like there's many buyers that are interested. At least Trump has, within recent days, kind of said that there's been a lot of interest. Latest apparently comes from Microsoft. This does remind me, though, I will say to both of you, it does remind me of during the first Trump administration when we saw some similar conversations happening about this debate over how exactly TikTok should be sold, how you sort of like ring fence some data involving U.S. customers. So a lot of still moving parts here. We'll have to see again where that kind of goes.
The other headline I'm seeing, Trump says India's Modi likely to come to the United States in February, so fairly soon. So there's just a lot on the plate, obviously. He has his new Treasury Secretary now in the fold. Bessent has been confirmed. What's going to be his priority number one?
Yeah, I mean, a lot of, what Bessent kind of talked about was some concerns about U.S. federal debt. That was a pretty big focus of that, of that confirmation hearing. I did think it was very interesting to see that there were quite a few Democrats who actually came out and voted for Bessent's confirmation. If you recall, during the first Trump administration, Treasury Secretary Steven Mnuchin really only got one Democratic vote. So that does indicate that at least when it comes to some of these picks, there's some that are a bit more palatable sort of across the aisle. I think in addition to any sort of domestic concerns, sort of about managing federal debt that, Scott Bessent might be concerned about. Obviously, market stability is another key concern for him. And then again, I mean, this is somebody that, presumably would be pretty heavily involved in, foreign policy when it comes to tariffs and when it comes to economic policies. Would be really interested to see what else Scott Bessent has to say about these additional tariffs. We've seen Trump really go hard recently. We're seeing some of this back and forth about ideas of 2.5% tariffs and such. So I think now that he's actually in the position, the next few days I think are going to be really interesting when it comes to seeing whether Scott Bessent actually vocalizes a bit more some of those plans on tariffs and another sort of foreign economic policy in particular.
Yeah, Jill, thank you. Jill Deese is there, our news desk editor. From one top story to another, and the impact still we're seeing across sort of the DeepSeek narrative across these markets. So we spoke earlier on here on the show with UBS Global Wealth Management, Adrian Zuercher, and his comments really in particular around how do you trade this AI theme right now. Yeah. Beta's gone, it's all about alpha. Have a look.
The easy beta trade of the AI is behind us. You probably have to do a bit more digging. You have to do research. These companies have to deliver on earnings. They have to confirm that they have a plan at least to monetize that. And otherwise, we will see that investors which are really piled into these stocks will actually retreat, and we will see a setback. So it's about alpha, I think, the next leg of this AI rally, and not about beta.
Yeah, and certainly to the point Adrian was just making, that the success of DeepSeek is launching this cost-effective AI model that may present a tactical opportunity for investors. Joining us here on set is Catherine Nye, our Asia stocks coverage, who leads, of course, our coverage for Asia stocks. Yeah, talk to us about some of the opportunities right now here.
Absolutely. I mean, who knew that over 24 hours, 48 hours, that this would be just such a changeover? I mean, this is a shakeup of massive proportions, global shakeup of sort of tech leadership. I mean, we can see today on the board. I mean, these companies are continuing to fall, and it's not just AI-related companies. It's not just like the Nvidias of the world, which yes, overnight had a massive fall, I think the biggest record for the company. I mean, but we're talking about the infrastructure here, right? The uranium companies that we thought that were going to power this, this infrastructure. This is about data centers. I mean, everything here is just being toppled. It is tumbling. It is sliding. I mean, even in Lunar New Year week when the volumes are already very low, I mean, everything is falling. And you have to remember that a lot of markets are not open right now, right? Korea. I mean, let's see how Hynix does when it opens later this week. I mean, let's see TSMC in Taiwan on Monday. I mean, we aren't even at the pain point yet. And it's just really casting fresh doubt on what it means. I mean, we talk about profitability, right? Like investors had been paying a premium for these companies, for NVIDIA, for TSMC. They hadn't seen the results. They hadn't seen the monetization, as your earlier speaker had said, but they were paying for this promise. And suddenly all of that is cast aside. I mean, we're here on a completely different group of who the winners are, and I think everybody's just kind of searching to figure out who the real new winners are, and that's quite elusive at this moment.
How exposed would the Hong Kong markets then be to the AI trade as it relates to the development of AI and DeepSeek? Obviously, we've seen the Hang Seng Tech Index up 9 of the last 11 sessions. There's been a bit of a buoyancy around tech in this part of the world. I'm not saying it's a bull market by any stretch of the imagination, but if there's going to be a bit of a rotation out of NASDAQ as the heat comes off, are there opportunities here?
I'd say that, what we're seeing here with HS Tech is seeing a little bit of that bounce, a little bit of the euphoria. But really, I think, as we witnessed yesterday when China's market was still open, that most of the suppliers, most of the sort of ecosystem around DeepSeek and the companies that are already using it are actually traded onshore. I mean, we saw some of these companies that you probably, don't really look at, not in your no one's top 20 list. But we saw yesterday 15-20% gains, limit ups right at the open for these kind of like little data providers or software seekers or things like that. I mean, that's really where the action is right now. You have to remember that, a lot of the tech companies that are traded here in Hong Kong are not quite at that level yet, or they're trying to they had been trying to work with some of their American colleagues or overseas colleagues on some kind of partnership. So they're not quite getting there at that moment. People aren't quite at that level of seeking sort of a renewal in Asia.
So do you look into Shenzhen more then? The Shenzhen markets?
Yeah, exactly, which are closed today.
Yeah.
Well, how do you suspect we reopen in mainland China? Of course, I mean, we're a full week away, but suffice to say the market is shut at such a convenient time.
This will be a good thing, but you have to also remember that, I mean, the market was open yesterday, and it was good, and we saw the pockets of it. I mean, these next couple of days are very much focused on Lunar New Year, right? Yeah. Look at how the movies, apparently there's a host of new, host of new movie releases that I am not privy to because I'm not of the certain audience. But there's a whole host of new movies. People are looking at travel data. People are looking at, consumption data and whether, the trade-in program or the vouchers for eating, those are going to be effective. I mean, that is really what investors are focused on for these, these next couple of days. And I guess we'll see sort of the collision of these two things, right? The new euphoria related to Chinese AI. And if the numbers look good for Lunar New Year, we might see quite a nice bounce at the open.
Last year, though, we had a pop-up and it kind of fizzled out.
So Steve, you had to do that.
Sorry, it's the year of the snake. Come on. No, Catherine, thanks so much. Our stocks reporter here for Bloomberg Asia. Still ahead on the China Show, we discuss investing in AI. Of course, we've been talking about it all day with early-stage Silicon Valley venture capital fund Race Capital.
Right, but ahead of that, though, back to the macro conversation, all of this vol in the currency markets, how does that remove some of the allure from the high yield space? Fixed income outlook coming up next with Jen Zhu. Welcome back. You're watching the China Show. On your screens, to your left, the 10-year yield near session highs. To your right is the Bloomberg Dollar Index, also near session highs. The move in the last few minutes down to comments coming out of the U.S. president on Air Force One, I believe, talking about how the preference for universal tariffs much bigger than the 2.5%, of course, and the context there is, of course, his Treasury Secretary being reported to talk about this specific number. So how do we approach the risk premium in the market right now, given we are predicated with the tariff threat? Joining us here on set, Jen Zhu, APAC Fixed Income CIO at Allianz Global Investors. Good morning and nice to see you.
Good morning.
How are you thinking about tariffs these days?
Yeah, these days, that's a really good question, because it changes all the time.
Yeah.
But one thing we can be sure is that I think it's the worst case between the U.S.-China tariffs probably is much less likely, isn't it? Because initially, remember the last year before Trump was elected, we're talking about 60%, isn't it? And now we're talking about what? From 2.5% and 10% maybe. And actually, the President Trump has recently said that he has a good relationship with President Xi. And so let's see what goes there. So from a fixed income perspective, what we care about is what is the tail risk, right? Yeah. The tail risk obviously is that 60%. And now that tail risk has been reduced significantly from here.
Well, then we have to also, as we go into the holiday, think about what the policy strategies are going to be, which are likely to be announced at the National People's Congress, which is still just about a month away, about 5 weeks away. When it comes to the Fed, probably not going to act overnight, or this week, I should say. They're probably not to ease. But there is probably more policy easing left to go in China. What does that mean for the bull run we've seen with CGBs, and what other kind of policy response do you expect to come out of authorities in Beijing in March?
That's a really good question, because with or without tariffs, China needs to do more policy stimulus or policy support in the economy. With or without the tariff, there is one thing that it's undeniable, that China is currently in a cyclical down cycle, and the economy is trying to transit into a higher quality economy. Right, so that means that they will need to have both easing monetary policy and the fiscal policy. But we need to be careful here because, for one, this time around it's quite different from what we saw in 2008. Most of the problems that China has, in fact, is internal. But if you look at the last round, no matter it's 1998 or 2008, it was more external driven, weakness driven, right? So this time around it's internal weakness driven. Now, and also because this round, there are more structural issues. For example, the local government debt issue, the property issue, which means the fiscal policy may not be as expansionary as before. Yeah. So monetary policy has to take the core stage here.
Jenny, sit tight. We're going to take a quick break, and we'll come back and explore more about what we're seeing in the China market, as we head into the holiday, but what kind of policy response expecting coming up after the break. Jen Zhu, Asia Pacific Fixed Income CIO at Allianz Global Investors, is staying with us. We'll be right back. More ahead. This is Bloomberg.
We're back here with Jen Zhu out of Asia Pacific Fixed Income CIO at Allianz Global Investors. I think we touched on China and monetary policy. I think that is clear that rates will remain low, if not go lower, for the foreseeable future. What assumptions are you making on the Chinese 10-year yield?
Having said that, we're literally still in the middle of a cyclical down cycle. That's one. Number two is, not only we're in a cyclical down cycle, but also China is in the transition period from, a very fast, infrastructure spending-driven, debt-driven growth model to a higher quality growth model. That requires the funding cost to be as low and long enough to facilitate this transition. Right. So for that, adding these two cyclical and structural factors together, I wouldn't be surprised to see close to 1% in this cycle, some point at this cycle. So we're talking about probably another 60, 70 basis points from here, right?
Well, speaking of the recovery, obviously, no discussion about recovery in China can happen without talking about the property market. Vanke is the poster child du jour right now of their issues and their profit warning and the like. But they have a wall of debt repayments due at a time when they're not necessarily getting the kind of revenue that they were necessarily used to. What are the steps that have been taken so far in China to solidify the property market? How does that help or potentially hinder the debt repayments that we're going to be seeing from a number of different developers?
Over the past probably 20 years, and we can see that in different countries, in fact, let me start from there first. No matter it is state-owned companies, private companies, if this company has been running an unsustainable capital structure for a prolonged period of time, if the sector is in a down cycle, and if they have mounting maturities, the probability of default actually is quite high, isn't it, if you think about it?
Yeah.
Now, what happens now, what happens to this particular company, Vanke, is that, okay, maybe with the state help, that the mounting maturity factor the risk can be reduced. But it doesn't solve the issue that whether this business is a viable business. At the end of the day, they need to go back to fundamentals to see where they want to position the company. Right? Is the mass market developer? How can they have a sustainable profit margin that to sustain the capital structure? What actually is a sustainable capital structure? Those are the bigger questions that, okay, well, I'm going to pay my next debt.
Yeah, I mean, you hit the nail on the head there, really. What is a sustainable capital structure, given I think, to your point, the structural changes in the economy that are taking place? You know, the three red lines clearly a few years back and where you are now. What opportunities then are there in high yield if it's not this?
We're still quite bullish on Asian high yield, to be very honest. Asian high yield delivered the best performance last year among
exceptionally well.
Exactly. Among all fixed income globally, right? Of course, it's very difficult to repeat that type of double-digit growth return this year. But we think if you have a diversified portfolio, and we still think that overall we're in a very favorable credit cycle among Asia, no matter where you look at. And with China tail risk, as we just talked about, China tail risk has come down significantly. Yes, you can play some alpha games there as well, because there are the very high yield names are still just in China. Right. So with that core portfolio with very favorable credit cycle, decline in default rate, you can still get a decent return this year.
How do you see, with the Trump tariff threats and all that, the pressure is going to be on the yuan as well? How confident are you that the yuan, they can keep stability, as Pan Gongsheng did talk about when he was here a couple of weeks ago in Hong Kong?
I think PBOC already has a very good track record last year, isn't it? If you look at it, and the CGB is the best performing government bond versus the G7. And it's not just a little bit of outperformance, it outperforms significantly. And that's in US dollar terms. Right? So we know that when you get this return, you get from yield movement and FX. And you look at the FX volatility, it is among the lowest among all the other currencies. So we believe this is going to continue.
Jenny, thanks so much. Happy New Year to you.
Happy New Year.
All right, Jenny Zeng, Asia Pacific Fixed Income CIO at Allianz Global Investors, joining us here on the last day of the Year of the Dragon. Still to come, we're speaking exclusively with the Pakistani State Bank Governor Jamil Ahmad after policymakers cut their benchmark interest rate to the lowest in almost 3 years. That's coming up on Insight, not on the China Show. Well, here are some of the major geopolitical stories we are following. President Trump is preparing an executive order for the next generation defense shield to protect the U.S. against ballistic missiles and other long-range attacks. The order will commission a system similar to Israel's so-called Iron Dome. The White House says attacks by ballistic, cruise, and hypersonic missiles is a catastrophic threat facing the United States. Bloomberg sources say Israeli Prime Minister Benjamin Netanyahu is planning a visit to Washington next week to meet with President Trump. And Israeli media says Trump's Middle East envoy, Steve Witkoff, is expected in Israel before that to discuss longer-term solutions to regional conflicts. Meanwhile, the EU has agreed to reactivate its border assistance missions at the Rafah crossing between Gaza and Egypt.
Okay, we're looking at markets right now. So, I mean, the only story in town so far that continues to give in a very significant way is really the DeepSeek story, right? So this is really the Asia proxy to that. It's worth pointing out, though, that you have a market like Taiwan that is not up and running. So in case you missed the drop overnight, TSMC was on 13%. So when that market opens, that's certainly something we'll be tracking very, very closely. Going to the Japanese lunch break. Plus, okay, yeah, SMIC's in there. Why not? Down about 5% on SoftBank. We're also looking at, what else are we tracking here? Okay, I'm getting lost a little bit. Okay, uranium stocks here. They're tracking their peers lower. And this, again, ties it back, really going upstream as far as the AI conversation goes, all right? Questions around CapEx and the amount of capacity and money that should be going into this, and questions around budgets and capacity. How much stuff will the trade actually need? Substantial losses right now over in Australia. I'm losing track of the day of the week. What day is it?
It's Tuesday, but it feels like a Friday.
It does feel like a Friday, doesn't it?
Yeah.
It also feels like it's 4 in the morning, given how cold it is outside in Hong Kong and how extremely incrementally freezing it is here in our studios today. But it's a reminder that the holidays are upon us, and we're just entering the final 30 seconds of trade in Japan and the last 90 minutes of trade for the year of the
Dragon.
Yes, because we're moving into the year of the
snake.
Coming up soon. 90 minutes of left there in the cash market session in Hong Kong. Japanese market. So here's what's interesting, right? This is a perfect example of index composition and constituency. A lot of the big tech and the AI plays in Japan are on the Nikkei and not so much in the topics, at least diluted weighting. Hence, we're seeing 0.6% down on the Nikkei. Topics has completely reversed the earlier losses. We'll see, of course, what the afternoon looks like. The other big story as well is a macro story with dollar-yen at these levels, with comments coming out of President Trump talking about higher tariffs. The threat of that, again, is boosting the U.S. dollar. We're going into the Asian market session, and we're down about 0.3%. A lot of that has to do with Japan. And keep in mind, of course, we are shut across many markets here in the Asia Pacific. We mentioned the dollar. There you go on your screens, 0.4% to the upside.
Just want to interject here. We're getting some headlines from Sam Altman saying that DeepSeek's R1 is an impressive model. And he goes on to say it's an impressive model, particularly around what they're able to deliver for the price. Obviously, that was something that stood out when the story 24 hours ago really blew up on the global stage. $6 million was the dollar figure that essentially they announced in their report that it took to develop that R1 large language model. I'm
just reading the full post here. So this is a post on X and the comments coming through. Let me just read it out, and I'm not on my phone doing something else, by the way. This is Sam Altman. We will obviously deliver much better models, and also it's legit invigorating to have a new competitor. We will pull up some releases, but mostly we are excited to continue to execute on our research roadmap and believe more compute is more important now more than ever. Interesting comment there and some phrasing there, that the world will want to use a lot more AI, and it'll really be quite amazed by the next generation models that are coming. Looking forward to bringing you AGI.
I think you're going to be hearing a lot of different justifications from these larger companies on why they still need to raise and spend and promise returns in the billions and billions of dollars. We're getting more reactions from Silicon Valley. In a statement to Bloomberg, Meta says it wants the U.S. to continue being the leader in open source AI rather than China. It also says open source models are driving a significant shift in the industry and will bring AI's benefit to everyone faster. We have so much to talk about with our next guest. Let's bring in Edith Yeung, general partner at early stage Silicon Valley venture capital fund Race Capital. So obviously, DeepSeek is not a new company. Yes, it was founded in 2023. We've been tracking it. Bloomberg Intelligence has been tracking it for the better part of 6 months. But it really exploded onto the scene last week into Davos, and now obviously on the markets overnight with the big drop-off in NVIDIA. is the key takeaway from you? The price tag, the open source nature of it, the disruptor? What are you thinking when you first saw this?
I think DeepSeek is a huge wake-up call for Silicon Valley. And if you think about it, really is the necessity is the mother of all invention. I think in the past, the U.S. investors or founders have this perception still, Chinese developers are copycat. There's no way that China will be able to compete with the U.S. if they don't have access to NVIDIA chipset, at least not the H100. And then more importantly, it costs billions of dollars to build these LLM. All these assumptions are flawed.
Yeah.
And basically what's going on is that now we can see the Chinese are not copycat. In fact, they're so confident about their work, they open source it. And DeepSeek and also Kai-Fu's Zero One models also cost very little to build, just as good and faster, cheaper. So at the end of the day, it really makes Silicon Valley investor to question, wait a second, in the last 18 months or so since ChatGPT, we invested in billions of dollars and without ever questioning mostly American founders in their ability to optimize compute, energy, time, where all these money go. And more importantly, I checked right before I came over that on their site, O1, in order for developers to build on it, the API costs at least $15 per million token versus DeepSeek, 1 cent. 1 cent.
What does it mean in simple English?
Means when at Raise Capital, we invest in all developer infrastructure.
Yep.
When I need to build an app, I can call different APIs. In order to use it, I have to pay. Therefore, now I have a choice. Do I pay the $15 to OpenAI or do I pay 1 cent? There's a huge difference. So for us as investors, the key thing for us to think about is not just spending billions of dollars on GPU, that's one thing. But the key thing is the ability for these developers to optimize it. So therefore, maybe the Stargate project don't need to spend $5 billion. Maybe the DeepSeek team can help them optimize to $10 billion.
Yeah. So how much does this blow a hole in that model that you were talking about, where you should invest billions of dollars into this, and we'll get eventually billions of dollars of return?
Well, I think for investors, for us to all keep in mind that when Google started, Google wasn't the first, second, or the 10th search engine. It was many, many years after Yahoo search already dominant. So as an investor, we need to keep in mind that just because you're the first doesn't mean that you're going to be last or the winner. So it's just sort of nature of law of accelerations in that sense that it's okay. I think without going through this whole transition of spending billions, we won't get to this point. But the key thing is that we should not expect this year going to continue to be the mega billion-dollar round. And in fact, I think all the early-stage investors will get a lot smarter. And how can we optimize our venture spend so that we can get the bang of the buck?
Do you think, and I'm wondering if you've heard currently, if this might put on ice any funding rounds or funding deals that were supposedly closed just because of this rethink that's taking place right now? Do you think some deals are on ice?
Well, I think at the end of the day, for venture early stage, I don't think everything will put on ice. It's still one of the most exciting area in terms of investment. And I think what is going to make AI companies to win is not just about the LLM. Is access to proprietary data. Is to think through security, compliance. There's a whole lot of other things that we need to spend on to make this great and so many more use cases for us to invest in.
How about capital raising for these Chinese startups? There's a number of them other than DeepSeek as well. I'm sure venture capital is looking at these Chinese players quite intensely.
Yeah, as you mentioned, Bloomberg Terminal been tracking it for 6 months. And I wrote in my newsletter, I wrote about, in addition to DeepSeek, there are another hundreds, literally hundreds of LLM AI research labs in China. The Moonshot, the Zhipu, or the Minimax, they all raise hundreds of billions of dollars, and they're closed source. So I think most of the American investors are quite clueless about what's happening in China. They don't go there. They don't talk to the founders. I think we need to make sure that we wake up to learn what's happening in China, to really learn from each other. At the end of the day, I don't think it's about China versus U.S.
Right.
It's really about closed source versus open source. And more and more American developers should leverage the open source and what DeepSeek had done and build on top of it and make it greater.
I need to ask you then about some of the curbs that the White House has put in as it pertains to U.S. investors looking to allocate capital to AI technologies in China. Haven't they put a wall in between that? And I'm wondering right now for Chinese investors or U.S. investors looking to invest there, should they be aware of some of these restrictions right now? How can they actually put their money to work if they're not allowed to?
Yeah, honestly, for raise capital, we've been very, very focused on just Silicon Valley investment because we don't know how the policy would change, particularly with CVS. We really don't know. And think about it, right? With TikTok, it's on their website, is 60% owned by U.S. institution investor. Even with that, there's a lot of unfriendly sentiment in the U.S. But I think in some sense, U.S. users, just like how they flocked to Xiaohongshu and RedNote, I think the U.S. developers, it's going to be the same attitude. I go to where the best model is and go to what's the best app that I love. The user don't care. But having said that, I think being a good citizen, Silicon Valley investor, we do need to pay close attention on what President Trump, in terms of his policy and how it impact investment. I think President Trump wants to be an AI president, just like he wanted to be crypto president. And there will be more and more collaboration between Silicon Valley and White House. Elon is over it. David Sachs is over it. Larry Ellison is over it. And we will pay very close attention to what's going on over there.
You said earlier that many U.S. investors perhaps don't know China as well, other than the broader narrative, right? So on these AI companies, you said a lot of them in China are closed source. There's also open weight as opposed to open source, where it's free to everyone play with and to dig into, but the data and the algorithms are essentially closed. Is that a model that perhaps Beijing, the government, would be more comfortable with, given the sensitivity of data?
I want to remind all investors that Chinese founders are not Chinese government, and absolutely with like U.S. developers too, just like OpenAI is closed source, and a lot of time with open source there's a tug of war, because if you open source everything, there's nothing left really for investors to invest, because everybody can copy each other. You can also say OpenAI copy Google Transformer. They wrote the white paper first. So the key thing for us is that it's a fine line. It's an art and a science. You don't want to build a company, you don't want to open source everything. But having said that, for me personally, I basically treat GitHub as the app store for developers. We're excited about it. I don't think, particularly for anything related to AI, it's really the collaborative force that make it greater. And of course, if you worry about any sort of weird things in the back end, that's why it's open source. You can run the entire code base for DeepSeek locally, so then you don't have to worry about anything weird.
Yeah, the story has really forced us to talk about this in essentially forced allocation of time. I want to get to you. What else are you guys looking at for the rest of the year?
We're very excited about AI agent, and I think
we're back to AI. Okay, I was trying to pivot away from AI, but yes, okay, go ahead.
Okay, to completely switch topic.
But go ahead if that is the case.
Well, for us, I'm very excited about vertically driven. Means you can have any kind of open source model, but healthcare data, finance data, banking, legal, these things is you have to protect it. And you can only win if you have special access to data. I think those are very, very exciting. And then for us, we've been paying very, very close attention to anything related to energy. You saw in the U.S. they are restarting 3 Mile Island. That's in Zeng. And of course, there is enough energy to go around to support all these data centers. So we are thinking through how can we continue to support the infrastructure side of things.
Okay, looks like you guys are going to be busy still.
Yes.
2025. Edith Yeung, thank you so much. Nice to see you, by the way, in town.
Happy New Year to you.
GP there at Race Capital. Just ahead here in shows, as the Lunar New Year holiday gets underway, China is offering subsidies to encourage consumers to spend a little bit more. Details just ahead. This is China Show.
Traveling towards the arts, those things, and sports, very low. I think there's a huge room for service consumption to boost up. But you need to do a lot of reform, to boost the market. We need more fiscal policy to support the consumptions.
Travel continues to expand. The middle class continues to expand. People love to travel for profit and for pleasure across the country. And that continues.
Customers are very adventurous. They want to go to long-tail travel destinations. Last year, during Chinese New Year, the top 3 travel destinations are Australia, New Zealand, and South Africa. South Africa is very far away from China, yet people are very curious to go there.
And yeah, some of our recent guests talking about what they expect for the upcoming Lunar New Year break. And certainly as the Year of the Snake approaches and threats of U.S. tariffs loom, China is seeking to boost its domestic economy. And as it's doing that by rolling out some subsidies and coupons to entice shoppers over the upcoming few days. Let's bring in our team. Alan Wong, our China economy and government editor. And also here on set with us is Ada Lee, our Bloomberg intelligence senior analyst. Alan, let me start with you. Tell us about this consumption push and what's new about it.
Of course. So China is now trying to stimulate consumption by offering a bunch of discounts, basically, sponsored by the government. And there are 2 parts to this program. One is the national program, encouraging people to trade in their old appliances, old cars, and get new ones, ideally more energy-efficient ones. And then local authorities, they have followed the Chinese central government's lead in offering consumption vouchers of their own that their own province or cities can use. And these vouchers come in all shapes and sizes, such as free movie tickets, or subsidized movie tickets, I should say, or discounts for clothing and that sort of stuff.
But isn't this artificial? They're not opening up their wallets necessarily. They're getting handouts at a time when so much of household wealth is tied to property. There's no quick fix to that. So they're not actually putting their savings into the economy.
That is precisely the problem. The economists we've spoken with told us basically that the subsidies will only move purchases forward. Like if you plan to buy a new refrigerator, now that you have those discounts, thanks to the government, maybe you'll buy sooner. But then the other problem is that because the program is mostly about appliances, there are only so many refrigerators you could use, right? And the other problem is that because certain categories have discounts and most categories don't have, so as a consumer, you naturally want to buy stuff that's subsidized. So you're moving money from one area to the other area without necessarily adding to overall growth.
So what tweaks could we expect next, if any?
China has said it will ramp up the force of these subsidies, and they have expanded actually the number of product categories that these subsidies apply to. For example, initially, they only covered refrigerators, computers, and stuff like that. But now, in the latest round that started earlier this month, they also started covering smartphones and of a certain price tag.
Alan, thanks a lot. Gong xi fa cai to you. Happy New Year. Bloomberg's China economy and government editor, Alan Wong. All right, Ada, we're going to bring you in here as well. What kind of trends are you seeing for spending this year?
So I agree with Alan in terms of the subsidies helping and boosting the sluggish economy at the moment. And also remember this year, the Chinese population is having an extra day for the Chinese New Year holiday as well. So all these in combination should actually help with...
Okay, wait. Ada, we're just going to fix some of the audio issues there, and of course we'll get Ada back once we sort that as well.
So travel obviously is going to be big, Dave, as it always does. The biggest human migration on the planet, and Baijiu. Sorry? Lots of liquor.
Those two come together, family gatherings as well. In fact, just an anecdotal, one of my first, I believe my first long train trip in China back in the mid-2000s was during this holiday.
Yes.
As you would know, extremely crowded train stations. It's fun.
A lot of baijiu. I had an 83-hour train ride in China in 1991.
83 hours?
83 hours, yes.
How many bottles of baijiu did he go through?
There was a lot offered to me as the only Lao Wai on the train, yes, foreigner.
Yeah, and you would get a lot of free stuff thrown your way, I would imagine, back then. Ada, I think we've sorted the gremlins here on your audio. Yeah, but continue your thought. Sorry.
Absolutely. So, 恭喜发财 first, I think is
let's do it again.
As a one thing, yay. May the year be a prosperous year ahead for everyone. But in terms of what we have been seeing for consumption, I mean, the government is expecting trips by trains to be over 510 million trips, with also over 19 million trips by flight and many more by cars. So people, it seems like they are traveling. We saw the pre-sale movie tickets also ranking above 55 million US dollar already from last week. So we're seeing people going out and perhaps spending a bit more on different categories. And like what Ellen said already, you know, with the home appliances as well, people are maybe buying ahead of Lunar New Year, and also those that are taking advantage of the subsidies. But, you know, in terms of other areas, we are continuing seeing some weakness in terms of consumer sentiment. Like you guys point out with the Moutai, we thought the Year of the Snake edition could have brought some prosperity to Guizhou Mautai's sluggish demand. But unfortunately, what we have seen is the price slumped by over 26% since they launched that in the beginning of this year. So it is actually quite tough at the moment. We also saw the fourth quarter prelim numbers by Guizhou Moutai down in terms of a slowdown in sales. So it's still growing, but a slowdown.
But very quickly, last year we saw the spending during the Lunar New Year holiday sort of peter out in the subsequent months. Authorities want, consumption. Will this have legs?
I think it will still have a little bit of legs, but if you look at people's willingness to spend, it seems like the sentiment remains a bit muted. They are spending on certain categories. They are willing to maybe buy Xinjiang apples to get gift, but otherwise, not so much.
Fortunately, snakes don't have legs.
Well, yeah, I was going to say.
All right,
the ability to
we'll
move
slither
forward
into the new year. Here we go. Bloomberg intelligence analyst Ada Lee. Plenty more ahead. This is Bloomberg.
Right, we're closing up shop early here in Hong Kong. A look at the Hang Seng Index, final trading day of January, final trading day, of course, for the year of the horse. And we're just entering the last hour of the session because we're off. No afternoon session, of course, dragon rather. Okay, I'm getting it wrong. Well, let's turn the page on that because it's the year of the snake, Stephen. We have some merch to show you.
Yeah, dragons and snakes are kind of similar. They're reptilian, aren't they?
If you go all the way back the evolution cycle, yes. Yes. At some point they will merge.
So, 新年快乐 and 是年快乐.
Yep. Some of the merch right here. Shout out, of course, to the guys at JP Morgan Asset.
And this is CLSA Citic Securities.
Let's zoom in on this, though. Trying to show merch. This is the Bloomberg version of that. You can zoom into that. So we wish all of you a happy year of the snake, 新年快乐大家. And thank you for joining us, of course, in the last year or so. There's plenty more ahead, so hope you're all well. Keep healthy, keep safe, hug the family. Plenty more ahead. This is Bloomberg.